we have not lost a dime in any of our deals. And I don't plan on doing so in the near future or in the long term.
Welcome to the Service to Syndication Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication Podcast. Hello, my servicemen and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlow. I am a U.S. Navy vet. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, capital raisers in the world, where most have donned the uniforms of our great country. We aim to provide the tool sets, the skill sets, and mindsets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me Mr. John Rubino, who is a top-notch commercial real estate investor and capital raiser. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some value out of this interview, if you get some type of insight, mindset shift, if you learn a new skill, new information, receive inspiration or motivation to go out and take some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, or share it in your stories. Help us spread our message while you help others. And for all of you who shared this episode, I want to say thank you. Again, everyone, I have with me Mr. John Rubino. John is COO, founder, and co-managing partner of JID Investments LLC and director of KW United Wealth. With over 20 years of real estate investment experience and 12 years as a business owner, John specializes in syndication, private equity, and passive real estate investing. He has raised more than $43 million in capital across 40-plus real estate projects, generating consistent returns for over 200 investors. A graduate of New York Maritime College and a retired U.S. Naval Aviator, John also holds a Master of Science from Embry-Riddle Aeronautical University. Passionate about helping others achieve financial freedom, he leads JIDI and KW United Wealth in connecting investors with high-yield residential, commercial, and mixed-use opportunities. All right. So, John, before you became this very successful person I see in front of me, in about 2 or 3 minutes, give our listeners a little bit of your backstory, like where you grew up, how was your upbringing, and what in your past shifted your mindset into becoming the person you are today.
Wow. Well, Cedric, first and foremost, thank you so much for having me. I really appreciate it. I said when we first jumped on, I feel like I'm looking in the mirror, and I know now that you being a Navy veteran, I can feel that. So thank you so much for your service and all that you've done and for our country and for the freedoms we get to enjoy each day and be thankful for. So thank you for that. Born and raised in New York, like you said, Brooklyn and the city, and came from a large family from my mom's side of 13 brothers and sisters who are all entrepreneurs. Even the ladies on the side of the family My grandfather came over from Italy, started his own business, an olive oil company. And so that reignited or just ignited, I think, just the entrepreneurial spirit in my family. So my uncles had grocery stores and they owned different types of businesses. My dad was a Marine. He served in Korea. And when he finished his time in the Marine, started his own construction company in New York. So I've been around entrepreneurs my whole life from when I was a kid. But my first passion always was and will be my military career, being in the military, wanting to serve, and just going out there and helping other people with what I could do as a military person, a military member, a Navy pilot. So my first 20 years in as a Navy pilot was amazing. I learned so much that has made me such a good businessman and hopefully humble, but at the same time knowing how to build relationships, connections, knowing how to find people I could help and serve and work with. And the Lord has been so good to me and my family and all the opportunities and ventures that I've been able to go out and be part of. But I think it all started with mom and dad, just, showing me the ropes and teaching me respect for others, having a family that was just entrepreneurial driven. And it's given me the opportunity to go out and do what I do each and every day today. About halfway through my Navy career, back in 2004 or 5, I really got an interest and excitement for real estate. I had some friends who were doing it. They were doing some new construction projects and real estate investments, and I wanted to do it. I was just so excited. I was in Southern Maryland at the time, stationed down there. We had bought a home, my wife and I got involved with building 2 new construction properties, and I enjoyed it. I had a blast. I did really well on those, and so at that point, I was about halfway through my career. Decided I wanted to stay in and make it a career. We had gotten orders to Naples, Italy, to serve on the Naval Forces Europe staff, being over there for 3 years. So I took all of that nice money I made, about $200,000, and I invested it with some close friends who taught me about how to look at deals now as more of a passive investor, a private investor. And so getting an education on learning about how these deals are structured, why this market's better than that market, how the money's brought together, how you make your returns, and just understanding how to read the documentation was so amazing, and just in that fold. But then to also make, a 10% return on my money for 7 years, 70% over that time frame was just icing on the cake. So I took that experience. I moved back to DC in this area back in 2011, had orders to work with the Navy headquarters staff right outside the Pentagon. And I knew I was going to be retiring in about 4 or 5 years. And I said, what do I want to do when I grow up? So I thought about being a commercial or a government contractor, being in the private sector. But I said, I'd love to be able to do what I've been doing with real estate and bring that to my friends, my family, guys I flew with, guys I served with. And I want to take this out and bring this to other people. And so the first thing I did was, I'm not, I don't have a ton of business experience. So who in my network has that business experience? And so it was my accountant at the time, who's now our CFO, and he's got 30 years plus experience as an accountant and an enrolled agent and as a business owner. And what he brings to the business is such a wonderful complement to what I can do and what I do. So we brought these 2 elements together, my vision, my thought, his experience, and we grew this business. And today, starting after, we started in April 2013, like you said, we raised over 43 million to date. We've gone full cycle on 18 of the 35 projects we've invested on, and we've got a nice active portfolio, about 15 to 17 projects. And so my job day to day is being the operations guy, knowing where our project's at, what's been some of the challenges, how are they moving, taking that information from the sponsors, the operators, the developers that utilize our capital and are out doing the things they're going to do and making sure that we're all on the same page. And then my other side of the business is working with my 200 plus investors that had came on initially as friends and family, who then saw how well we did and how well they were making money with us, who introduced us to friends and family and friends and family. So we've grown to a nice network of about 200 plus investors that are basically cutting checks for $25,000 to $50,000 in investment. Each deal set up as a separate entity. We call it a single purpose vehicle, and we register that as an unregistered security under the SEC through our attorneys. And so together with our investors who want to invest with us on a specific deal, we raise that capital, typically $1 to $6 million as a kind of total raise, and we bring that inside of each of the projects. And so the investors are usually making around a 15 to 20% per year return with a 12% preferred return and access to profit splits in that scenario. And so the business is growing and we're enjoying what we do. And then I thought about 2 or 3 years ago, hey, again, how can I give back? How can I show people how this works? And so I set up a community called KW United Wealth through a local brokerage, a Keller Williams arm. And we have about 300 to 400 agents, of which I provide opportunities in educating, informing, coaching, and mentoring them to show them, hey, this is how you do this. This is how you can go out and make additional passive income, whether you want to stop working in a few years, or you want to grow long-term capital gains type returns, or you want to invest on multifamily deals. So we educate them, we teach them about the basics to get their traditional stuff set up, their retirements, their Roth IRAs, all of that stuff together. And then we go to the next level of, hey, let's look at alternative investments, specifically in real estate, to passively invest. So it's been a great journey and a great adventure. And I love getting up every day. First and foremost, getting on my hands and knees and thanking the good Lord for another day, but then going out and being able to do what I do, which is just such a blessing.
That first deal that you were talking about, that was ground up construction, that first off, were those military friends, but secondly, was that residential or commercial ground up?
Yeah, so when I was building new construction homes, that was myself and another military member who is a Navy pilot who was talking about fix and flips and renovations back in 2000 when we were both deployed together in Iceland, and he was talking about this. And so I didn't know what that was, but he kept going with it, and he was doing a lot of his business down in Jacksonville, Florida, where we were stationed. We both got orders together to Southern Maryland. And so he really, I think it was God's plan for this, started his business there in the DC market where I live at that time, back in 2003, 2004. And so we were both on a detachment together in New Orleans. It was about an 8-week detachment, excuse me. And, I'm in my room playing Nintendo, Tech Mobile, or whatever it was. And he's like, hey, knucklehead, why don't you put that controller down? Let's talk a little bit about real estate. You seem like you're a little interested in it. So I got a crash course with him for about 5 weeks. And I was just like, go, I want to do this. So he and I together started looking for opportunities. This was about 2005, 2006. So it was right before the '08 kind of, recession. Everything was really overpriced. So the real niche we got into is building new construction property in an area that was just so fruitful and ready to go for a new product in that market. And so we found a new construction home builder doing a subdivision. We were able to do a few properties with him. And that was the active side. But when I was finished doing those 2 deals and I was getting ready to go overseas, this gentleman wanted to grow his business. So he decided to get out of the military at that time and start his company. And those were the deals that I was really investing in. These were condo conversion deals, condo ground up new construction, smaller, 2, 5, 8, 10 unit in DC. And he had cash, which was great because he was getting properties in '08 and '09 and 2010 for dimes and pennies on the dollar, and being able to come in with cash with my money and other monies he was raising. So fast forward to today, he's an $800 million development company. I fund about 70% of our portfolio from the deals we invest on together. And he's my brother. We've got a relationship that spans 25 years. So to be able to work with a business like that, have him as my, Kentucky Derby winner every year to go out and do deals with, but then also find new investment partners that are out building and value add deals and multifamily and student housing that we can find, given our experience, has been great. But when we started the business, it was really joint ventures, going out and doing renovation properties with folks that needed, let's say 80% of the money. They'd bring in 20%. We'd partner together. We'd do, a first position lien, and we would do a deed of trust and a note, and we'd have it all structured, and we'd get a chunk of the profit. They'd get a chunk of the profit. So we set them up small because we wanted to start out small, get a little proof of concept. After 3 or 4 of those, then we started cutting our teeth into the development deals. $500,000 for an 8-unit condo conversion deal in DC where we raised $500,000. Ground up new construction for 20 condominium units in DC where we raised $750,000. And when we got to that $1 million mark, which was the next one, we said, we need to go out and get an attorney to make sure that we're following the law and we're compliant. So back in 2014, we outsourced an attorney that's a PPM attorney, and he does all of our paperwork. And we've done about 15 to 20 PPMs with this gentleman. And we've been very, very happy to have him to be able to do this, to do the blue sky filings, like you and I talked about, the Reg D filings, all this stuff that the attorneys do. So now we're a full-fledged business. We've got an attorney, we've got a marketing and advertising team, we've got investor relations with just two guys that have some employees. And we also use, I think I mentioned to you, the Juniper Square investment portal. So people can go on now, they can see their investments, they can grab a scotch on a Friday night or a coffee on a Saturday morning and in their pajamas see the investments that they're involved in with us. Totally passive, totally kind of, silent partner, but still have access to that and being able to be involved in that without having to deal with the general contractor, the engineers and everything, where the partnerships we've built on the sponsorship side is doing that. And we communicate with them and we're involved in that. And then we're acting as the liaison or the intermediary between the sponsor and the investor.
Now, could you have even considered or even thought, like 20 something years ago when you were just, you guys were just flying around doing your thing, that it would blossom, that gentleman would actually blossom into what he's doing today, and that you guys are still continuing to do these type of deals together?
No way. I mean, if I look back 20 years and said we'd be here in 20 years, I would just said, Lord, God bless you. We're on board. Let's do your will because you got a great plan, and he's got us to it. And it's been a great road. It's been some very challenging times with COVID, some deals that, they don't always go as planned. So you got to look at some alternate routes. We call the military branches and sequels from the path and learn, that, hey, this is not going the way we planned, but we've got alternative plans so that when our investors are calling us up and saying, hey, what's going on with this global pandemic and how are you guys dealing with it? We've got an answer to give them the confidence to know that we're out, first and foremost, protecting their money. And second, we're still trying to hit, a triple or double, even though we underwrite a home run.
Of course. So, John, can you share how your military background influenced your approach to business and investing, or if it did at all?
Oh, my goodness. Hands down, made me who I am today, along with my faith and military experience I had and I get to still be part of through networking and people that I know that are still active duty. I am just hands down blessed to be able to say that 20 years that I did was remarkable, that it gave me the skill sets, it gave me the confidence, it gave me the tolerance, it gave me, working in pressure situations where, you get up every day, get in an airplane, and your boss and your squadron commander is telling you, hey, we've got orders that we've got to go to this hot spot where, you could be shot at or you could be, really, it's not good. So you got to be able to know how to manage that. And so coming out of the military with those skill sets, being able to communicate, to write professionally, to be around people that are high level executives through the military, they're generals and admirals and senior executives, to be able to talk to them in a caliber that is kind of a higher echelon, that all came from the military. And I truly am appreciative and grateful for those experiences. Being able to see the bosses I worked for in the military where I said, I want to be just like Admiral Leiter, or I want to be just like Admiral Winnefeld. And then the other ones who I won't mention where I said, I don't want to be like that person, but I'm still going to learn from them. They're teaching me a lot and I'm not going to be like that, but I'm still learning about how not to be like that from those types of qualities, but emulating the ones that I really enjoyed and learned from and who were mentors of mine still today. So it's amazing.
Okay. Just for my listeners' knowledge and mine as well, what did you fly?
I was a P-3 Orion pilot, this big guy right here.
Okay.
4-engine turboprop aircraft. Our mission really was to hunt nuclear submarines, mainly out of Russia and the Soviet Union at the time. And then when business got a little quiet, we became a surveillance and reconnaissance aircraft during the Gulf War and basically had on-scene commanders on board who got to see the battlefield from our aircraft at 20,000, 30,000 feet up and being able to tell their forces where the bad guys were.
Okay. All right. Awesome.
Yeah.
So now, how did you transition from being, say, a passive investor into raising capital and now running your own investment firm?
Yeah, so that 7 years that I had while I was still in active duty status was where I was really just a passive investor. And again, making those returns and getting that education. When I got back to the DC area back in 2011, 2012, I had 5 years to say, hey, what's the journey look like next? And
Hmm.
so standing up the business in 2013 with still 4 years to go to retirement was fantastic for a bunch of reasons. One is I was able to get the business started, get proof of concept, and show folks what we were doing, and being able to do that part time while I was still had my job and got my income source and had the benefits of being in the military financially and from a security standpoint, and grow the business over those 4 years. And as I was making returns as an investor, because I invest in my deals, and making profits as a business, everything was just going right back in, because it's like, I can grow the business. I've got my W-2 for another 4 years. And that gave me the confidence to take this part time, growing my network in the area. Washington, D.C., we're around three of the biggest markets in the country, arguably D.C., Maryland, and Virginia. I was making a name for myself in a good way, a good reputation, meeting the people that I needed to know. And so when I transitioned out, the business was already kind of running. And so I took myself from part time and I said, I'm going to do this full time. And I was able to bring in another 50% of effort, which has just really skyrocketed the company so that I could do it, full time now, and not only be the COO and the founder, but also be the janitor if I need for the day, right? So I get to
Absolutely.
enjoy both parts of that. And then it also gives me the freedom as a business owner to set my schedule, manage things. And that takes a lot. If you're going to transition to a business owner, an entrepreneur from the military, having that opportunity to do it a little bit before you get out is so beneficial, because when you get out, you're no longer governed by the flight schedule or the operation schedule, or you don't have to be at the office at a specific time. You've got a lot of freedom, but that comes with a lot of responsibility. And so you got to understand, what are the things that I need to be thinking of now without being that rigid, overly disciplined person where you've got to be at a certain place each day because lives depend on it, right? Whereas now it's more, I've got the freedom, but that freedom comes with, I've got to manage my schedule. I've got to make sure I'm going out and growing the business. I got to make sure I'm answering emails. So that all has to be done. And so when I was doing that part time, I already knew 80%, hey, this is what's going on at the business. I'm working from 7 to 2 in the morning, let's say, if I had to, and we're still growing, and then I could do this full time.
Okay. Awesome. Awesome.
Yeah.
Yeah. Since I asked you that question about what you were flying, I was sitting here in my head and I'm trying to remember the name of the aircraft because I was on two carriers myself, and the last carrier I was on, I was aviation bosun mate, so I did the launch and recovery, but
Yeah.
I did more of the recovery on the arresting gear.
Yeah.
Um, and periodically they would allow me to come and peek my head up and do some stuff up on the catapults or the arresting gear. But I finally remembered what it was, long story short. It was the
Yeah.
E2C Hawkeye. We know you're gonna like this episode, so please like, comment, and subscribe to this channel so you can be notified when the next episode drops.
E2C, yeah, I was
That's
just
the
gonna
one.
say, got the little
Yeah,
dome on the top, right?
yeah.
Two engine. Yeah, that's a great plane. They usually do high altitude radar surveillance, and they're basically, again, telling all of the jets, hey, there's the target, there's the bad guys. So yeah, it's a very, very high valuable asset. Yeah, and
Nice.
you guys had a great job. A lot of risk with that job. It's dangerous, but
Yeah.
it's also exhilarating launching and recovering F-18s, and yeah, it's really cool.
Big time,
Yeah,
especially at night. That's when
yeah,
the adrenaline is really pumping.
that's right. Exactly. Yep.
Yeah. So, okay. So you retired out the military, 20 years, for most people, you know, that's enough. Especially as an officer, that's enough. You're good.
Yep.
So what led you to found JID Investments? So what made you do that?
I think ultimately it was, obviously it was an idea, right? It was a concept. It was, we didn't even call it syndication at that time when I was doing it back in, 2011, 12, and as an investor before then. I think it was just really I enjoyed this, and I would love to be able to do this full time and bring it to those that are friends and family that would like to do this. And so obviously I spoke to some of my pilot buddies who are investors, uh, and my business partner, who's down in Hilton Head, South Carolina, he lives there, had a firm, an accounting firm, and he had two offices down there. And so he started talking to some of his accounting clients who were close friends. And so we started talking about this kind of as an initial design. And everybody was like, this sounds great. I mean, we'd love to do that. So we got some assurance from those closest to us and friends and family that we really care about, and gave us, not only gave us the compassion and love, but also gave us the brutal truth, which is great because you want that. They wouldn't hold back and tell us. So when we started building the business and the ideas, we went to folks that had 20, 30, 50 years plus combined in banking and investments and real estate, and had them go through all of our initial information. And I'll tell you, they beat the living crap out of us, which was good because we needed that. But it was wonderful to hear them say, after they turned back the information, to go back and make changes. When you guys finish this and we're all on board, we want to be investors in this, right? So that told us that, hey, we're doing the right thing here. We've got something that people want. It was a desire to bring something exciting, something that others could grow with financially, but also through partnerships and relationships, to a group of people that wanted this. And so it was wonderful to be able to take that idea and turn it into a business, saying, hey, this is going to be something in high demand. People are going to love this. And if we can do it right, and we do it with a good relationships and good reputation, with a proven concept and proof of concept, it's going to do well. And so we had that confidence with a lot of prayer, and it led to a lot of success.
Okay. Okay. Now,
Yeah.
what makes your approach to private equity and syndication unique or different, say, than others?
Great question. So the sandbox we're in, or the niche we're in, is really a level of capital we can bring into a deal that is, it's too small for a PE firm or an institutional group, a private equity group, or a large scale family office. Those types of companies are going to want to write a check for 10 million, 20, $50 million, right? So we're too small. We're too small of a fish for those groups. And then we're kind of a family office, if you think about it, where we're bigger than someone that can cut a check for 100 or 300 or 500. So our kind of sweet spot's that $1 million to $6 million range, where we can bring in that level of capital for a deal inside of our network and be able to be the go-to for that sandbox or that niche. So as sponsors see us, they could say, okay, I can go out and get a bank loan, right, for the majority of my money. If it's a really big deal, I can go out to one of those private equity firms and get the 10 to 20 to 30 million. Well, when I need to bring in that icing on the cake, is what we like to call it, I can go out to a firm like John, and he can raise me 3 million or 4 million or 5 million in a time period that is relatively quick, let's say 30 days or 40 days. So businesses kind of come to us to basically first get to know us, and we want to get to know them. It's very important that we have a relationship. They understand what we do. They see we're a good fit for them as a business partner. And then we see the value they bring to us, and they align with what we're trying to do and the types of returns we want and the projects we're looking for in those markets. And so we want to feel good about them, because we're going to introduce them to a very important group of people that we consider family, which is our investors. And so to have that relationship at the executive level with those companies, looking at deals, going through that process to then introduce them to our investors, is very, very important. So that when we look at deals, we're already on the page to know that here's the returns, here's the timelines, here's the type of asset classes we're looking at. And when we get those deals, we usually take about a week to go through and do our due diligence, to then turn around and start working with the sponsor and our investors and our attorney to put the deal together and raise the funds.
Okay. All right. So along that line, you've raised again over 43 million or 40 plus real estate deals. What are some of the biggest lessons you've learned about building trust with your investors?
Yeah, investors and my sponsors. And I think it's really important, because on the sponsor side of the business, if I'm meeting a new sponsor that either is a referral, which is always the best, or I found them, or they've reached out to me, the prerequisite period is so important, right? Like, do they answer my questions within 48 hours, or at least telling me, hey, we're going to get back to you in the next few days, but we've got a few things. That's important to me, right? So communication is so important. If I don't see that, or I feel like, hey, this is a problem, that's a red flag for me. I don't want to work with that company. If I feel like they don't treat us with a level of respect, or they don't kind of look at us as a company that can really help their business, or they're just looking for us as a one-off, like, hey, we just want to do one deal with you, we have these other people we work with, that's kind of a turn off too, right? So there's really an important kind of back and forth we have to have at that level to feel good about the sponsors, and again, to be able to bring them on board, to be in a position to look at their deals. On the investor side, we want to make the investors always feel that they are the most important part of our business, because they are. And so communication to the investors, transparency to the investors, answering the phone calls when the investors call on a Sunday afternoon, getting back to them within minutes or hours if it's a work day, or within 24 hours if it's a weekend. That military mindset where we work 24/7, 365 is kind of how I operate as a business owner. So if I'm out Saturday afternoon watching one of my kids playing baseball and the phone rings and it's an investor, that phone call's getting answered. So it's very important to make the investors realize that they are the most important part. And I learned that as a kid with my parents and my uncles and my aunts, because the customer was the most important person, because the customer was the one that was putting food on the table. And if you don't treat that customer as the most important person, then you're not going to have a lot of food on the table. My uncles taught me early, and my dad taught me early, that you treat your customers like family. And so when I saw customers inviting my uncles over for dinner on a Friday night, or come over for a glass of wine, it resonated with me, because it's so important that the customers saw the importance and the care that these business owners were giving them. And that's what I try to bring to my investors. I want them to feel that. I want them to know that they are the most important thing. So my foundational virtues in our business is communication, transparency, and honesty. Those to me are the three important foundations. Of course, you have to have a proven track record, right? So we let our actions speak for us. Without those three, if one of those are weak or they're not very strong, your business is going to be a long-lasting and enduring successful company.
Yeah, communication and transparency, those are definitely at the
Huge.
top of my list, even if I'm gonna passively invest with anyone, that definitely leads to the forefront. Yeah.
Yeah, and Cedric, you got to be able to tell people the good news as well as the bad news, right? And just like you and I, when we used to talk to our boss at the military tours, whether it was you reporting to your chiefs or your department heads, right, or your maintenance officer, whoever you work for there, me going to my squadron commander or my general, my admiral, if I ever went with bad news, I had to have three options with the bad news, not just the bad news, because he's going to turn to me and say, okay, you're my expert. Tell me what I need to do. And if you didn't have those answers, it wasn't pretty. And that's how you got to treat your investors, your customers, your clients as, hey, this is a problem. We've got to deal with it, but here's how we're dealing with it. And we're going to get through it because we're a partnership, right? It's everybody succeeds. You, we, the sponsors, the project, the investment, we all do well together. We're all on the same page.
Right, right. So how do you educate, say you're a first-time passive investor, so they feel comfortable like putting their money into a private equity deal?
We spend a lot of time with investors who want to become investors with us, whether we actually have a deal and they hear about it and they want to learn more about the deal, or preferably what I like is when I don't have a deal, because it gives me the opportunity to really spend time with them, and it doesn't make them have that pressure to feel like, oh my goodness, they just want me to invest and they don't really care about. We take our time, we walk through that, and we do podcasts like this, which we love, where we educate people on marketing. It's not trying to be condescending education. It's just informative education, right? Giving them the opportunity to understand what we do, how we do it, come out to a project. Let's jump on a Zoom call. Let's go through this. Let's take one of our documents after you sign up and join us as a new investor. You're part of the family. You got access to us 24/7. You want to fly in from Texas to DC and go see some of our deals? You got it. You want to jump on a Zoom and go through a private placement with us? You got it. You want to get a deck and review it and then ask us a million questions? You got it. You want to look at a deal and decide at the 11th hour that after you've asked us hundreds of questions and you don't want to come in because it's just not a good fit for you? No problem. That's how we want to treat every one of our investors, so that they understand. Because a lot of these deals, they have a lot of things in there that people just overlook. When things were good from 2000, let's say 11, 12 to 2020, everybody was really like, hey, this is great. I'm making money. We're doing well. These guys are beating expectations. But when we fell off the cliff in 2020 and things got hard, people started asking questions. And a lot of times, I'd say 90%, 95% of the time, a lot of the questions they're asking was in the documentation, right? Hey, do I have to bring in more money on a capital call? Well, if you look at section 2 or 10 of the PPM, you'll see in our deals, we don't have mandatory capital calls. You don't have to worry about that, right? Or, hey, am I personally guaranteeing on any of the debt? No, you'll see in section 7 of the PPM, you don't have to personally guarantee it. You're not personally guaranteeing. So a lot of that happens when it happens, but we want to make sure we bring folks, make them aware of that ahead of time. We want to give them the opportunity to ask those frequently asked questions, especially for folks that are getting better at it and we do a good job and they understand it. Then they can ask, questions that they feel good about and they're confident about. So it's very important.
Okay. So John, what asset classes or say project types are you excited about right now?
Yeah, so our bread and butter, Cedric, is ground up. We love new construction. We like land acquisition, development. And the reason why is because the yields are so high. I mean, we can make 30 to 35% at the project level for our deals where we come in and the land's entitled and it's got to go through the development portion, which we call the horizontal, right, to get to vertical, which is the build portion. So if we come in early enough and we can get in with a sponsor that we know, we trust, that can walk through that process with the local municipalities to get permits and plans approved. We love those deals. We'll come in, and those deals will take anywhere from, let's say, 2 to 5 years. And so the benefits of that is you're looking at gains that are treated as long-term, right? So you got long-term capital gains, that's cutting your tax bill in half. Instead of paying, 35, 40% combined income, you're now looking at it as a gain. So that keeps your income brackets lower, and you don't have to be taxed on that gain as income, which is huge. The downside is, it's a longer time. There's definitely more difficulties on those deals, a lot of hair on those deals because they're challenging. But we've gone through those. We love them, and we continue to do those. We're also doing value add. We're starting to get into more value add. We've got a active portfolio down in Charleston, which is about 36 apartments existing for our cash flow with also 5 buildings that have 6 retail spaces that are throwing off commercial retail income. So we like those deals. For us, it's always been and it always will be sponsor, asset class, location, and returns. And I'll switch location and asset class because sponsor and location to me are the 2 biggest things that are very important. And if the sponsor's a good business, established, and it's got proof of concept, and it's in a location we like, which is typically the Southeast, Mid-Atlantic, DC, Maryland, Virginia, then the asset class, if they're good at what they do, they could do storage, senior assistance, student housing, multifamily. We're on board. And then the returns, right? That's the last part. A sponsor, location, asset class, returns. I usually put it to a little song for people I coach. And if we got those 4 and they're checking the box and we feel good about it, then we're going to dig in. But yeah, to answer your question, we'll look at any asset class that makes sense. We're also in opportunity zones. We have 2 opportunity zone projects. So people that have gains from a liquidity event, we can park those into as opportunity zones. We're looking at a different multitude of types of assets that are out there. So yeah, very exciting. And that's what we usually stick to.
Oh, nice. That's awesome.
Yeah.
So now let's take a peek behind the curtain a little bit.
Yeah.
So how do you underwrite and evaluate deals to ensure your investors, it meets their expectations of risk and return?
Great question. So about 7 years ago, we brought on a part-time due diligence consultant who is a Fairfax County, Virginia, where I live, guidance counselor now, but he used to be a Cushman & Wakefield financial analyst that underwrote deals for commercial lenders. Wow. So I was introduced to him from a very good friend who is a vice president at a local commercial bank. And so I brought him on about 7 years ago as part-time. And so he's a guy that can dig into a deal and help us with things like stress tests and break-even analysis. He looks at our rent rolls. He looks at the growth of a market. He's just really an invaluable asset that I plan to bring on full-time once he finishes up his government job, because he'll get a nice little pension and then he can work with us full-time, without the headaches of having to worry about a W-2. I'll also tell you that with the explosion of AI, it has just been unbelievable of what you can do on AI right now. And so I've gotten educated on AI, and I've been able to actually use AI to help me quite a bit on underwriting deals, on deals that would take me, tens of hours, maybe 100 hours to look at, are now taking me an hour to 2 hours to go through by just using the AI tools we have available. And so AI has just really revolutionized our industry, and it's revolutionizing business across the board. But to be able to go in and create different types of programs that are fitted based on my parameters and my checklists that, being in the military, we lived and died by the checklist, right?
Yep,
Checklists
absolutely.
I've built over the years on how to do my due diligence and my decks, and my performas and everything that I analyze. I've uploaded those all now and created a program that I can upload a deal and ask specific questions, and I get it like that. And so, of course, I look up my references, I look at what they're pulling the data from, and make sure that I do my homework, because sometimes it's not 100% foolproof. I'll ask
Correct.
questions like, "Are you sure about that on the rent growth?" And they come back and they go, "Oh yeah, John, you're absolutely right. Thanks for finding that." So you got to still do your research, and you got to make sure it's good. But at the same time, it's really cut down a lot of man hours on doing the work there, and it's been such a great asset and a resource.
Yeah, I totally agree. Yeah, definitely with, doing your decks. Oh my gosh. And I'm really scratching the surface right now of the underwriting piece. I'm
Yeah,
really starting to, I'm still one of those hands-on guys when it comes to
yeah,
underwriting your deals, but I mean, and I continue to hear it from other investors such as yourself. Like, these things are really helping them cut down the time that it's taking to underwrite. That way they can focus on other things that they need to do within their business. So that's
absolutely.
huge.
I actually teach a class on how to show folks how to use AI to use for real estate, and how to build different programs on
Wow.
how to use AI to anywhere from educating yourself on syndication and raising capital, and being a private investor, all the way to looking at deals and underwriting deals. You can get through, probably, I would say, if you could spend 2, 3 hours a day on it, you could probably get through about 30, 40, 50 deals a week just using a lot of those. And again, for me, the top tier and the iceberg, the tip of the iceberg is sponsor, location, asset class, returns, right? And that's what I'm
Yes.
looking at for JID. But there's other people in my network, yourself, is included in that. Is, can I help other people find good quality deals that may not necessarily be in our sweet spot or in our box, right? Our buy box, but or investment box, but I can help partner with them and find good opportunities that are maybe in Texas or in the West Coast or in the Midwest, or in a different asset class or different types of returns, right? I could still
Yeah.
help those people with using the AI tools.
Okay. Sounds good.
Yeah.
Yeah. So now, can you walk us through an example of one of your most successful projects and what made it work so well?
Yeah, I mean, we've had a lot of successful projects. I think one that stands out is probably the project we did in DC. I'd say back about 8 years ago, in 2016. We were with the gentleman I mentioned, who I've known for over 25 years. He tore down two row house properties in DC, probably similar to Philly. You get those suburban houses that have the row houses.
Yes.
Same piece of land. We tore the two houses down. We did a ground up construction of 20 condo units with 3 levels of underground parking. And so we raised about $1 million on that project, and over, I'm sorry, 750,000, $750,000 on that project. It was supposed to go 2 years. It actually ended up going a third year just from delays, go figure, with permitting and weather and, a lot of things you deal with. But on that project, we were advertising, I think it was an 18 to 20% per year return on the investors' returns. And so going that extra year, we actually brought in a total profit of about 635,000 on the $750,000 investment. So in 3 years, we probably hit a 1.9x, right? 90% return on the profit. And our investors make 60 to 70% of that. So year over year on that, they're making, close to 20, over 20% a year on that over 3 years instead of 2 years, right? So they're actually making an extra year worth of 20% to 22%, let's say, on their money. So that was a grand slam, and went really well. And it was a great project, and it taught us that let's continue to underwrite these deals conservatively as home runs, because when if I flip the coin and look at some of my tougher deals, if you could still hit a single and a double during COVID when you underwrite a home run, that's pretty good. Because I know deals that are going bankrupt, losing money, turning keys back over to the bank, and a lot of investors are just being written off with loss of full capital, which is horrendous. Knock on wood, and I'm knocking on it hard. We have not lost a dime in any of our deals, and I don't plan on doing so in the near future or in the long term. It's just really predicates the fact that we work with some quality folks, and I'm telling you, we have sponsors that have taken a hit personally themselves rather than lose our money. So that just speaks to the integrity of these businesses, and those are the kinds of businesses we want to continue to work with.
Nice. Okay. So now KW United Wealth focuses on helping people grow personally and professionally. What are some of the most common wealth building mistakes you see investors make?
Yeah, I think the biggest is I want to live on the penthouse, but I don't have a foundation, a first floor, and a second floor, right? They want to jump right to the sexy stuff, which is, syndication and private passive investment. My first question is, do you have a Roth IRA? And not to be condescending, but just to be a realist as far as, hey, what are you doing to take care of yourself that's boring, that's going to make you money while you sleep? Right. What's something that you could put in to that's going to grow for you tax-free that you can draw off of, right? What's the other passive sources of income you have right now outside of Social Security, right? What do you have that's out there? Do you have a 401k employee match? Do you have a 401k solo? Do you have the Roth IRA? Do you have annuities? Are you set up where you're putting money into those easy ones and you're maxing them out so that then you're ready to go to the next step, right? So let's get the foundation and the first floor built, right? And then let's go to the second floor. Do you have an estates planner? Do you have a self-directed IRA? Do you have some of the things that are a little more advanced, right? And when you have those things set up and you got that moving in the right direction, you got a trust, you got some things there that you can use that are a little more advanced, then we can get into the penthouse. Then we can look at syndication, because now you're bringing in a level of income or capital that is growing, and it's only earning 0.001%. And it's growing to a point where you've got a nice chunk of money, let's say $100,000. And then we can sit down together and do some coaching to say, hey, let's put 25,000 of that into an opportunistic deal that's development. Let's put another 25 or 30 into a value add deal. Let's put about 30,000 into a high interest yield account, whether it's a CD or a savings account. Let's put another 30,000 of that into storage or industrial to give you some diversification. So I like doing that with folks, but it's really important. And we do this in our group, right? Our wealth building group is, let's have the foundation, the first and the second floor built. And not only that, let's bring in the subject matter experts in their fields to speak about it. Because I could talk about it, but I don't have that nice license and certification on the wall. I bring in those people that can do it, the financial planners, the trust and estates attorneys, the CPAs and the accountants, right? The brokers, the people that can actually talk about that stuff. I can talk about it. It's my horizontal, but it's not my vertical, right? These guys are really good at that, and they can carry that. And so not only does it give them the opportunity to share their expertise, but then you have a trusted person that if you want to work with or get coaching from in that element, we have that available for you.
Okay. All right. Like it. Now, how do you keep your team partners motivated and aligned around a common goal?
That's a great question. I think that a lot of the times we want to be proactive. So I try to ask my team, what are we doing for our investors that we could do better? So we put out a 6-month newsletter that's very detailed and inclusive. That's on our website. Everything's on our website. I mean, our company deck, our newsletters, our executive summaries, again, very transparent. We want folks to know that they can look at that stuff. What are we doing that we can continue to keep our investors informed, involved, excited about what we're doing? Whether it's, hey, interest rates went down 25 basis points yesterday. What does that mean for the industry? What does that mean for us personally? What does that mean for our projects? And what does that mean for future business, right? So getting ahead of the marketing and advertising, getting ahead of informing and keeping people on board. So it motivates the team, because we know that if we do a good job with that, it's going to lead to potentially new investors, new people, because I bet about 80% of our investors are organic, people that we met through others we did well for, who are introducing us to friends and family. And so that's very important to me. An organic referral is so big, because it tells me, hey, I'm doing a good job. And I don't mean to be prideful, but it's just telling me, hey, I'm doing a good job and we're doing things right. And it also tells me that our investors see the wealth and the growth and the value we bring. And just like me, when I started the business, they have the same thought as, how can I bring this to people in my world, in my network, in my circle, to grow and to enjoy?
Okay. Well, John, wow, time has flown.
Right? It's fun.
Yeah, when you're talking shop, man, I mean, and you're doing stuff
Awesome.
that you really enjoy and love, time does fly, unfortunately. But
It does, and
be,
you're doing a great job too with your podcast. You're having some great people on, and I'm just honored to be part of this. And I think what
yeah,
you're building is fantastic. So keep up the great work.
thank you. I appreciate that.
Yes, sir.
But before I let you go, what's next for JID Investments, KW United Wealth? Any big
Yeah,
initiatives you can share with us?
I think keeping the aircraft flying on a straight line with clear skies and sunny skies and enjoying it with no traffic in the air, which I love, right? Just making sure we're doing what we do well and that we continue to do it well and build the foundation, but also reach out to people that want to learn more, who want to be involved more, who want to do more, whether it's a service member who I love helping service members who are transitioning into this or into other businesses to help them learn from some of my mistakes and capitalize on some of the successes I've had. To be able to reach out to me, I'm available on LinkedIn, just John Rubino. You can reach out to us on JIDinvestments.com. If you're local to the area and you want to learn more about what we're doing with KW United Wealth, reach out. But what's really exciting is over the six months, and you and I spoke about this, I've got the opportunity to take a syndication program nationwide to teach people and to educate people and coach people more on syndication, and more than that, really enjoying what it means to be a passive investor, to have fun doing it, to really change the lives of people, to grow their wealth and financially growing their wealth and having independent wealth and financial freedom to be able to live the life they want to live. Right? That to me is like so exciting to be able to see people say, "Hey, what you're doing has really been helping me." And that to me just fills my heart. It just makes me feel good about what I do each day.
All right, all right. Well, John, it's been a blast having you as our guest today, and all the
Thank you.
wisdom you have provided to my listeners. Trust me, it's greatly appreciated. And
Sure.
all right, and I want to thank you, our listeners, for tuning in to the Service, the Syndication Real Estate Podcast, where we want to add value to you and your investing business. Please tune into our next episode where we will interview another fantastic investing professional. See you next time.
Thanks for listening to the Service to Syndication Podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.